No matter how I try, I find my way to the same old jam. Good times, bad times, you know I like my share. When I want it from work, and I man, I still don't seem to care. 16, I fell in love with a girl as sweet as could be. It only took a couple of days till she was rid of me. She swore that she would be all mine, love me till the end. But when I whispered in her ear, I lost another friend. Oh, good times, bad times, you know I've had my share. When the woman left home for a better man, but I still don't see it again. Good times, bad times. Good morning, everybody. Happy Monday. It's February 13th, 2023. Great to be with all of you today. It's time for our daily bites, and we do these Mondays and Thursdays every morning, about those 2 mornings around 8:30 or so. We're running a little bit late today. I had to take a look at some data here before I got the presentation started here for you today. So let's go ahead and get into it. First of all, congratulations to the Kansas City Chiefs, winners of Super Bowl 57 for the second time, I think in 4 years. They've won the Super Bowl, and the third time all time for the Chiefs. So great day for Patrick Mahomes, Andy Reid, and the rest of the Chiefs. Well-deserved win yesterday. Nice comeback after being down over about 10 points in the fourth quarter of the game. So Eagles put up a really great fight, but it was a terrific Super Bowl. A lot of scoring, which is what I like to see. So congratulations again to the Kansas City Chiefs, Super Bowl champs. So let's go ahead and get into it today. So talking about the markets, we have a lot to cover here before we get together next time on Thursday morning. We see the futures are down sharply this morning from the highs, not down altogether, but they're down off the highs. We were up about 15 handles. We're only up about 7.5 now, and we did get a good, nice pop on the futures overnight as Europe and Asia all popped higher, and we saw a nice rise up here. And from negatives, we were down about 15 or 20 handles when the game was going on last night, but we managed to turn that around. And of course, Friday's action. Let's take a look at that here as well. You saw that Friday we ended up opening up slightly lower, and then we rallied up nicely over here, bounced around for most of the day, and finished strong the last couple of hours here, bounced around over here and finished near the highs of the session on Friday. And again, once we opened up last night, we came down, and then have come off of that level. So over here. So now we're up 6 points, 53 on the NASDAQ. Slightly higher on the Dow Industrials, again, which were down sharply just a couple of hours ago. How it's going to go today, I don't know. I think a lot of people are going to be trying to use a little bit of caution in front of tomorrow's CPI number, right? And we do have retail sales coming out on Wednesday morning. Thursday morning, the PPI number is going to be coming out as well. So these numbers are likely to move markets. What do we have going on right now in volatility? We see the VIX is up about 85 cents here, but we do see the VIX futures are down 38 cents. So we do have a bit of a discrepancy here between the futures and the cash. Now, why is that important? Well, because if you look at the VIX futures here, put that up here for you. So we notice that tomorrow is the last day of trading for the February VIX cash. See one right here? 1 day of trading left. So that will expire on the opening print Wednesday. So what does that mean? That means March becomes front month, and let's take a look and see where March trading is at right now. See that March futures are at about 21.95. roughly in line with where the VIX cash is right now. Take a look at that right here. So you see the VIX futures are here. We might see a little bit of a bump down in this future because we know that the cash is gone up today. The VIX future is down, and we may see the March future come down a little bit, and then would mostly be in line with what's going on here with the VIX cash. So I don't think that we're going to see much of a trading going on in February here. If we do, it's going to be just closing out of positions. So if we see the VIX where it is right now at 2150, say tomorrow or the next day on Wednesday, when the VIX cash futures expire, we're going to see that the VIX futures term structure flattening out, right? Because we see it's really portraying a slightly bullish condition here, right? This is a contango. When it's flat to inverted, is more of a bearish consideration for the markets, right? So we'll be watching that the next couple of days, of course. As far as trading ideas and the markets are concerned, again, we can see here that the S&P 500 is correcting now off of a recent high of close to 4,200. We're down about 110 handles, or about a quarter, or about 2.5% off of the recent highs over here. We did hold that 20-day moving average, and you can see that. Let me expand that out a little bit here for you. You can see that happened on Friday. Nearly tagged that 20-day moving average, which is the dotted line. If we get a test of that level again, and it doesn't fail or fails to hold, we're going to get a move back down to some of these other moving averages over here. It's probably going to be pretty quick. But I mean, I'm going to give the benefit of the doubt right now to the bulls. And why is that? You can see this uptrend line is still intact, right? And until that breaks, and in fact, it's a channel. Let's see here. Until that breaks that channel there, you have to respect the trend and respect the momentum here. What I think is going to happen, or what I hope is going to happen, or what I guess might happen, is completely irrelevant, right? I have to pay attention to what's going on here. So that to that extent, do I have some puts on? Yes. Do I also have some calls on? Yes, right. I got to play both sides of the action over here, especially when you get an environment like we had on Friday, when it was super choppy. We were going up and down in a range all day long. Really no action to speak of, no breakouts at all. We probably had a lot of selling going on with options, open selling options. If you're a volatility seller on Friday, or even just selling premium, you probably did really well on Friday. So that was a great fostered environment for that. But until this trend shifts of higher highs and higher lows to something more bearish, then I'm going to be playing both sides of the trade, as I think all of you should. So how should we be positioned in front of all the economic data that's going to be coming out this week? I think you need to be careful tomorrow, especially since we know that the market is expecting a pretty hot inflation reading here, and I think I shared this with all of you guys last week. The Cleveland Federal Reserve Bank has a tool called inflation nowcasting, right? And you can see that tomorrow's CPI number here is expected to come in pretty hot at 0.65. That's month over month. You see that inflation month over month. And you got our trusty calculator out here, and 0.65 times 12, that comes in annualized at 7.8%, right? So what does that mean? That means if we had 12 prints in a row at 0.65, it would be a 7.8%. Now we're not going to get that, but what economists tend to do is they like to annualize, right? And look at individual numbers on a monthly or quarterly basis, and maybe annualize those to get a good read on what the general momentum and general pace of numbers or readings are, what kind of pattern we can discern from that. Well, you can see that certainly the core number on inflation is looking to be pretty hot as well too. 0.46 times 12, that's at a 5.5% rate, annualized rate. It's these numbers that I'm showing you right here are too hot for the Fed. Too hot for the Fed. And so when we take a look at the Fed Watch tool, say, well, what is the market expecting for interest rates? We can see here that there is just about a 100% chance of a quarter point hike on in March, in the next meeting in March 31st, right? How do I know it's 100%? Because it's 90.8% of a chance of a quarter and 9.2% chance of 50 basis points. So it's basically there's a 10% chance of 50 basis point rate hike, and 90% chance of 25, 100% chance that there's going to be a rate hike at the next meeting. So let's take a look. Let's move forward to the May meeting, right? And so the May meeting says 22% chance we stay at 4 3/4, 71% chance, actually 78% chance that we're going to get at least a 50 basis or 25 basis point rate hike. 50 basis point rate hike comes in at 7%, right? So we're already pricing the market in up to 5.5% on the Fed funds. Then you go out to June, same deal, 5.5, almost 5.75 in June, and in July, you can see that even a small smidgen of market players are expecting to see 6% on the Fed funds. So I don't know if the market has reacted to this change in Fed funds futures. I don't think it has, and certainly if the CPI number tomorrow and the PPI number on Thursday come in line with what the expectations are, or even a little bit hotter, these numbers are going to go up, right? And the market is probably not going to like it. We've had good, strong gains in the stock market in January, slightly higher in February. If that dynamic changes for interest rates, and we start seeing interest rates starting to drift back up, it's going to put some pressure on equities and put some pressure on stocks, and we're going to see some of that those gains from January start coming off the board here. So I do think that we're kind of back in a range here between 3,600 and 4,200. Let me show you another chart as well too from TrendSpider that I have up here. So I put this out for our AAP subscribers every Monday, and you can see here, this is my weekly chart of the S&P 500, and you can see I did have a different type of a channel put in with the lower lows and lower highs, but recently I put in this dotted line here, okay, and you can see that we're slightly above there, but if we get back into that channel, we're going to make a run back down at least to 3,500 over the next couple of months, if not lower than that, maybe perhaps down to this lower end of the trend line. Of course, the 3,500 level is going to be really good support. If we get oversold there, that might be an excellent area to add some risk on for the upside. So that's going to be that. So I want to show you one more chart here as well. This is new highs, new lows. We had been talking about this and discussing this recently. This number is still positive here. It's been positive all through January and February of 2023. I do like the fact that we're still holding above there. But if we do break down here and come off of these recent positive levels, there's going to be some downside to be had in the markets as well too. So just be ready for that. Be familiar with that. So what do we have? Last few things. Earnings coming out this week. We've got some earnings from Cisco, I believe on Wednesday. Roku also on Wednesday. Crocs on Thursday. Applied Materials also on Thursday. Vulcan Materials, which is the name that we have in the Action Alerts Plus, comes out on Thursday as well. Shake Shack comes out. Deere, which is also another number. Guys, sorry about it. Wasn't showing you my charts here. Let me see here. guys can see the chart right there. Sorry about that. Coca-Cola comes out tomorrow morning. Happy Valentine's Day to all the ladies out there and all the guys too, all the lovers out there, spreading the love. Actually, I'm going to talk about that in a little bit. And Akamai Technologies comes out tomorrow along with Marriott. So still a lot of earnings to digest over the next several days before our next get together on Thursday morning. Again, the last couple of things I wanted to mention to you. We do have a nice special going on for Valentine's Day. I want to share that with you. Let's see here. It's okay. You guys gonna like this here. There's Cupid Bob here. Cupid Bob is on here. Well, there you go. Actually, no, that's not it. It's that says our Black Friday sale. $9.99 is our special for. Let me show this to you right here, real quick. There we go. You guys can see that here. $9.99 to access 6 months access, saving 30%. There we go, right here. So you can DM me, you message me on Twitter or elsewhere or in the room if you want to take a look at this total access 6 month special. $9.99 is normally 30% higher than that. So it's a pretty great deal to give a try for the chat room, the EO service, and the spread trader. And then finally, last thing I wanted to share with you is every once a year, maybe twice a year even, I will do teach a class on options trading and technical analysis. So I have this all lined up for starting on March 18th. So I already have 9 people in the class. I've got 3 slots open. Learn how to successfully trade options from this hands-on 6-week program. We have 6 sessions talking about options basics, how to trade and manage your mindset, how to read charts and technicals, the options flow and the Greeks. We're going to do a live trading session, which is going to be session number 5. That's going to be on April 12th, and then last session putting it all together. So during this class, I will teach about options and how to use them easily, fundamentally, and then also we always do trade ideas at the end of the session. It's about a good probably an hour and a half, 2 hours of teaching in the class on Saturdays. It's a great deal for all of you. I think most people who've taken this course before have been able to more than recover their costs for the class during the trading idea session. So something that you're interested in learning about. Again, we have 9 people already signed up for the class. $9.99 for the 6 session. I think it's really rather inexpensive for everybody. But I've got 3 slots left. So send me a message on the side if you're interested in learning more about this. On Twitter or in the classroom, so in the chat room. So that's going to be it, everyone. I appreciate everyone spending a little bit of time with me. Again, I'm sorry I was running a little bit late today, but have a great day. Keep it light. Pay attention to the action here in front of you. Don't take a lot of risk in front of CPI tomorrow. It's not necessary. You can always take some risk afterwards, right? Have some calls on, have some puts on, and again, this is about getting to the other side of the mountain, right? We want to get through this bear market together. But there's going to be a bull market out there when this bear market is over. We all know that. We've got to make it there. Have a great day, everyone, and I'll see you guys on Thursday.